Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad, and it is the penultimate trading session, and we're definitely waking up to a better set of news thanks to US President's positive remarks at Davos yesterday evening. So not just has the US President walked back on the EU tariffs, which has once again reignited bulls across the global markets, but we do have a mega money control exclusive by my colleague Chandan, who is at Davos and managed to get a soundbite from President Donald Trump saying that the Prime Minister is a fantastic leader and the US-India trade deal will be a good one, and sooner or later it will be there. But yes, definitely that would wake up the bulls who have been in a deep slumber this week. This week we've already seen a bruising one, given that Nifty has declined over 2%. And with just two trading sessions left, we'll watch if indeed the bulls can make up for the losses that it has made for along this week itself. But yes, the global picture, that stands much optimistic and stronger. US futures continue to rise, given that all the major averages on the Wall Street delivered over a percent gains overnight. Even the Asia-Pacific markets have started the day largely on a good note on the back of this easing geopolitical tensions. Now, what Trump has said is that they have reached a framework on Greenland, talking to the NATO chief, and he's also dismissed the talk of using military action to invade Greenland. So that's something that markets would appreciate, given that they were fearing if indeed US President would use any military action on the Danish territory. But yes, separately, we also had NATO chief talking in an interview where the reports said that he has not discussed about the sovereignty of Greenland, but rather the discussion focused majorly on the Arctic region, where the Chinese and Russians have been more active. So yes, all of these developments, remarks out of the Davos event definitely can favor the markets and reignite the risk appetite. But yes, apart from that, back home, we'll also be watching out how the export-oriented stocks, for instance, your textile stocks or even shrimp stocks behave in today's trading session on the back of these positive remarks that US President has made on the trade deal with India. We'll also be tracking some individual stock reactions from the December quarter results. Eternal has come out with strong set of numbers, although Dipinder Goyal has, stepped down as the group CEO, but he will be, a part of the board and will be the vice chairman for Eternal. So yes, some results reaction we'll be watching out. Bank of India also came out with solid set of Q3 numbers. So we'll watch out how all of these stocks behave in today's trading session. Also, don't forget to drop us your stock related queries on our live feed and we'll address them shortly. But yes, let's move on and take a quick check of the top headlines, sir. US President Donald Trump praises Prime Minister Narendra Modi in a mega money control exclusive, calls Prime Minister Modi a close friend and expressed confidence that India and US would have a good deal soon.
I have great respect for your Prime Minister. He's a fantastic man and friend of mine. And we're going to have a good deal.
Trump walks back on EU tariff threats, says that he has arrived at a framework for reaching a deal with NATO on Greenland and the entire Arctic region. The European Parliament formally suspended a ratification process on the US trade deal. US stock futures upbeat after Trump tempers Greenland fears. Asian markets start on a positive note, while the GIFT Nifty is indicating a gap-up start for our own markets. AI is changing industry, says India Infosys CEO Salil Parekh, adds growth will compensate for the shrinkage. Wipro chairman also says that India has a unique opportunity to leverage AI, and that's a CNBC TV 18 exclusive. Zomato parent company Eternal reports a blockbuster performance in the third quarter led by EBITDA growth and quick commerce. Company announces Dipinder Goyal will be stepping down as the group CEO but will remain in the board as vice chairman. Albinder will be taking his position meanwhile. Right, in yesterday's trading session, we definitely saw that the Nifty had slipped below its 200 DMA but still recovered and clawed back to those levels. And the rebound, however, lacked some conviction despite the 250-point recovery that we saw. And the selling pressure definitely emerged near that 25,300 odd levels. And right now, whether or not Nifty is able to defend 25,000 is something that we'll be watching out for, because global markets have been quite resilient. So the next moves on the Nifty 50 is something that we'll be watching out for. But yes, recent result reactions is something that will be driving the markets going ahead. And given that volatility has been on heightened levels, so we'll watch out how that particular India Wix also behaves in today's trading session, given that it's also the Sensex weekly expiry day. But yes, market tone remains cautious, but on the back of the Q3 results, we have some individual stock reactions. For instance, your Indigo, DLF, Coforge, all of these companies will be reporting their third quarter numbers. And like I was talking about export-oriented stocks, they will also remain in focus on the back of Trump's remarks on the US-India trade deal. And from the global front, we'll be watching out for the PCA inflation data, which is due tonight. And that's the major benchmark for the Federal Reserve to understand how the rate trajectory is going to pan out going ahead. So something that to watch out for as well. But yes, from the cash flows position of where we stood yesterday, FIIs, they sold stocks which was worth about 1680 crore rupees in the cash markets, and DIIs offsetting the buy with buying stocks which was worth about 4000 crore rupees in the cash markets itself. But yes, put call ratio rising to about 0.78 from 0.72 levels in the previous session. And the stock which is newly added to the F&O band, that's your Bandhan Bank ahead of its December quarter figures. And the stock that is retained, that's your Sammaan Capital, and the sale has been out of the F&O band list. But let's take a quick check of how the pre-open rates have been panning out for the markets. If you look at the pre-open rates, Sensex is up by about 500 points. Nifty is also up by about 100 points above that 25,300 mark. So we'll watch out how the session behaves in today's trading session. But to understand how your trade position should be like in a market like this, let's quickly get on board with a technical expert of the show. Joining me is Chandan Taparia of Motilal Oswal. Chandan, good morning. We definitely have good news to begin with, easing geopolitical tensions, good cues that came in from the global markets. And given that Nifty has seen a painful week, from here on, what levels are we watching out here?
Good morning, Lovisha. Thanks for having me. So yes, we have seen a sharp sell-off in last couple of trading session, but yesterday it witnessed a decent recovery from the lower levels. However, VIX added to 14 marks, which clearly indicates that tug of war will be there in the market ahead of the union budget and the geopolitical concern or the comment from the US market. But yes, as of now, it seems that market could respect its key moving averages on the closing basis, took support near 24,900. And I believe that if market manages to hold 25,000 marks, then some recovery could be seen, which can take it towards 25,500 to 25,550 as of now. And if we talk about the Bank Nifty index, this index also witnessed selling pressure on the last day. But again, I believe a hold of 58,500 is important. If Bank Nifty manages to hold the same, then I believe recovery could be seen towards 59,500 to 59,750. So in both the indices, we have seen selling pressure. Nifty has gone into the deep oversold territory. Most of the data setup are in oversold zone. So because of that, a recovery of 200, 300 points towards 25, 500, 550 cannot be ruled out.
Okay, all right. That's the view for Nifty 50. But yes, Bank Nifty levels, anything that you are watching out from here also, Chandan, because we have had good results that came out from Bank of India today.
Yeah, so already mentioned about the Bank Nifty that it was resilience for most part of the last few weeks. But yesterday it drifted below its 50-day EMA and made the sentiment slightly negative. But today's opening, I think, again, giving the sense of positive to range-bound bias in the banking index. If you notice the price behavior of last 50 days, multiple time it took support near 58,700. Yesterday it drifted below the same, but now opening higher. So I believe now for day point of view, 58,700 could act as an immediate support. And if Bank Nifty manages to hold the same, then I believe positive to range-bound bias could be seen to take the Bank Nifty towards 59,500 to 59,750.
Okay, all right. That's the view for Bank Nifty index. But yes, some export-oriented stocks which will also be in focus today, shrimp and textile stocks, given that they've had, underperformance in the last year also on the back of the tariffs that were imposed on them. Chandan, what are you watching out from here? Because we did have a money control exclusive where the US President Donald Trump has appreciated and praised the Prime Minister and said that the US-India deal would be a good one.
Yeah. So I think that is the key trigger, and I think because of that only the market is reacting on the positive way after the sharp decline of last couple of trading session. The important part is now VIX needs to cool down, but we are not expecting VIX to go significantly as we are heading towards budget. I believe the market will go for selective sector and stock specific. The beaten down name could get some recovery. However, if you look at the last couple of days, we have seen positive strengths in the metal and mining counter, and in fact, the rising price of the gold and silver are supporting these names. So one need to focus on counter like Hindustan Zinc, Hindustan Copper from the metal space. If you look at the chemical point of view, I believe some profit booking is visible in most of the name, but counter like UPL or SRF can find some supported buying zone. In PSU banks will focus on counter like SBI and all. So again, if market recovers, that's good sign. But again, we have to focus on the selective stocks and sector. I believe it's going to be that kind of theme and scenario to be in the market as of now.
Okay, all right. That's the view coming in from the export-oriented themes. But yes, one sectoral index that stood out yesterday, that was your metals basket, the sole sectoral outlier in a weak market. Chandan, what's your view for the metal index? Is there more run-up left, or do you believe that's already in an overbought territory?
So like we have seen a sharp run-up in Nifty metal index. In fact, precious metal have really done well, whether we talk about gold and silver. Gold is glittering, silver is shining. However, some consolidation was seen, but major trend is positive. So two ideas. First, try to keep the trailing stop loss. But as of now, positive on the Hindustan Copper. Buy on decline is advised with support of 545. We are looking for a move towards 580, 590 kind of level. Talking about Hindustan Zinc, I believe trend is intact, but need to keep 675 as a support. But one need to keep in mind that most of these stocks are in oversold. So position sizing is important in these counter when we are looking for buying interest at much higher levels after the recent run up.
Okay, all right, got it. But it's apart from metals, it was the oil and gas also which bucked the trend yesterday. Definitely good gains that came in from Reliance Industries yesterday, and that helped contribute to the Nifty's overall momentum. Chandan, what's your view for the oil and gas basket? And of course, for Reliance Industries, how does the structure look like going ahead?
So 13 days back, Reliance gave a failure breakout. It headed towards 1610 marks, but formed a bearish candle, and from last 12-13 days, it has been making lower top, lower bottom. Yesterday, it took support near 1373. And if I look at the price behavior of last couple of months, multiple time it took support near 1340, 1360, and now at 1370. So I believe the recent bottom near 1370 could act as a key level to get a recovery towards 1450 to 1470 kind of level. So I think recovery seems to be there in the price movement after the recent corrective move of more than 10 to 12% from higher levels in the counter. Talking about other oil and gas, I think we have to be very selective. Try to focus on selective name. If I look at oil marketing company, trend is mixed. But if I look at the ONGC, then positive range bound bias could be seen in the counter.
Okay, all right. Just, couple of seconds left before we go to the open, but we'll watch out how some of the stocks will behave in today's trading session. For instance, Eternal came out with some solid set of third quarter numbers. Even Dr. Reddy's has come out with its Q3 numbers, which was beat on estimates. So all of these stocks we'll be watching out. But if you look at the first rates that's coming in for the Nifty 50, 190 points gain that's coming in for the benchmark index. Nearly a percent gains, 0.7% gain coming in for the benchmark index itself, and definitely it's breaking that 3-day of losing streak. Sensex also starting strong with about 600 points gain. Nifty mid-cap index very affirmatively with about 565 points gain. Bank Nifty also showcasing a good set of gains with about 0.5% gains. So yes, definitely the markets are trying to recover the losses that it has made over the course of the 3 days in the last for this week itself. But yes, if you look at the market texture, definitely shows that, the advances have taken an upper hand in the early early minutes of the trade. Let's take a quick check of how the other pockets of the market has been doing at this point of time. Like I was talking about, Bank Nifty has started strong. If you look at the broader end of the markets, mid-caps and small-cap index is also showcasing a gain of about over 1%, definitely outperforming the benchmarks at this point of time. All of the sectoral indices have opened in the positive territory. You name it, be it your realty, pharma, IT, autos, all of them have been showcasing good set of gains. If you look at Nifty media index, that is also showcasing a gain of about 1%. Nifty pharma index with about 1% gains. PSU banks also doing well with about 1% gain. So all in all, the market structure looks quite positive today, given that we did start off with a good set of global cues. The easing geopolitical tensions have also woken up the bulls. And of course, the US President Donald Trump's remarks on whether or not US-India trade deal is on track. But yes, let's take a look at how the gainers and losers have panned out on the Nifty 50 front. Eternal soaring in the trade once again. Yesterday, it was also one of the top Nifty gainers. Today, it has been extending the gains. 6% gains coming in for the food delivery giant. Dr. Reddy's also showcasing good set of gains like I was talking about earlier. Both of these counters have reported good set of Q3 results, and of course the street has been appreciating on the back of that. Brokerages have also remained quite bullish on the counter, and that's why you can see both of these counters doing well. Tata Motors passenger vehicle also doing well. 1.5% gains coming in for there. Adani Enterprises, Jio Financial, Bharat Electronics, all of them seeing a good set of gains, 1.5% gains coming in for there. But yes, only 3 stocks are in the declines from the Nifty 50 index. You have Ultratech Cement with about 0.2% decline, NTPC with about 0.2% decline, and Nestle with about 0.2% decline. So just 3 stocks versus your 47 stocks are advancing from the Nifty 50 front. But yes, let's talk more about Eternal, given that they have reported blockbuster set of Q3 numbers. If you look at the net profit, that's up by about 57% on a sequential basis. Revenue has risen by about 20% on a sequential basis, and brokerages have largely remained bullish on the counter. If you look at by the brokerage notes that came out this morning, CLSA has given out an high conviction outperform call, saying that they have raised the FY26 to F28 estimates by about 5 to 15%. And they believe that the Blinkit's contribution per order has beaten estimates. Jefferies has also given out a bullish call, saying that the Dipinder Goyal stepping down as the CEO will be passing on baton to Albinder, and nothing changes because both of them will continue their current responsibility. So no negative reaction on the change of the leadership transition. HSBC has also given out a buy call on the counter, and they expect 15 to 20% annual returns from the company. Nomura has also given out a buy call, saying that the organization transition needs to be monitored more closely from here on now. But yes, good breakout today, and yesterday also we did see that the market, the stock did well in a weakish market. Coming to you, Chandan, for Eternal, how does the structure look like from a near term?
Yeah, so Eternal seems to be bottomed out. In fact, it negated its lower top, lower bottom formation on the weekly chart. On last trading session, it made the bottom near 268 and formed a bullish candle today. It opened higher, holding the gains. So I believe the bottom is already proceed, and I believe with support of 270, it can head towards 320, 333 kind of level. So I think one can go for buy on decline view, and I believe this is a good theme if someone is looking for positional point of view, because in India the tech-enabled business or new age business are likely to do well, looking at the consumption and the young generation which we have. So I think this is going to be one of the counter which provides the better risk reward ratio and has a strong setup to commence the next leg of release. So I think one should consider this theme.
Okay, all right. That's the view for Eternal. Definitely, the structure looks positive from a near-term perspective, and you can see that the stock has been with about the 3.5% gains. But yes, let's move on and talk about Dr. Reddy's, because that stock has also done quite well today. If you look at the Q3 numbers, that has been quite impressive. The net profit has slipped by about 14% on a Y-on-Y basis, while revenue has risen by about 4% on a Y-on-Y basis. But the Q3 has been beat on the street estimates, and that's why brokerages have largely remained quite bullish on the counter. Now, the focus has hinged on the approval of the generic semaglutide drug in Canada, but for in India, the semaglutide drug has already been approved, and we'll watch out how the growth comes in from that particular aspect. But yes, in the past 1 month, the stock has slid by about 10%. Today, the stock is seeing a good breakout. Chandan, what's next for Dr. Reddy's?
So like selective pharma counters are performing while most of them are also witnessing the profit booking decline. Talking about Dr. Reddy, the trend is negative as of now. However, it opened higher, negated its lower top, lower bottom. So it may stuck in a range. As of now, the 1175 is immediate support for a bounce towards 1240, 1245.
All right, 1245 can be the next support levels. Right, let's move on and take some of the viewer queries that's dropping on our live feed. The first query coming in from Naveen is asking the view on Nalco and how does the near-term perspective look like. Definitely, we were talking about the metal stocks earlier, Chandan, and you remained quite bullish on them. But for Nalco, any target levels that you're watching out there? Because in the past 1 month, the stock has given out 20 plus returns.
Yeah, so we have to keep in mind that selective metal counters have positive trend, but they might turn volatile after a recent sharp run up in most of these names. But yes, Nelco is positive. As of now, 353 is immediate support. Till it holds above 353, it can head towards 380 kind of level. But yes, after the recent run up, risk reward ratio might not favor, so need to keep the position sizing accordingly. Or if someone is already holding the position, keep the trailing support for your existing long position in the counter.
Okay, all right. That's the view coming in from Nalco. Of course, the stock is also seeing some good momentum today. But yes, let's move on and take another viewer query. We have Kalki, who's been asking the view on Federal Bank and how does this structure look like from a near-term perspective. Chandan, what's your view? I mean, of course, on the back of its good set of results, the stock has zoomed about 10% in the past 5 days.
So, Lovisha, before I talk about Federal Bank, let me tell you that Bank Nifty has positive price setup. Yesterday, it drifted lower, but practically in last almost 10 weeks, it has not broken 58,700. Yesterday was the breakdown, but that is the failure breakdown now. The way market is again recovered, and somehow practically it is holding above its 50-day exponential moving average. So 58,700 is major support for Bank Nifty, and if that is respected, I believe Bank Nifty has again potential to head towards 60,000 to 60,235 or 437, which is the all-time high for Bank Nifty index. Now looking at the banking space, we are quite positive on selective mid-cap name and PSU's counter. So SBI is one of the strongest name apart from Canara Bank, where we are looking for an up move in the counter. SBI has been making higher tops, higher bottom on the weekly chart. Now with higher base of 1020, it can head towards 1070, 1085 kind of level. Federal Bank is also one of the strongest name. It has given a massive breakout on the daily and the weekly chart. In fact, the small pole and flake pattern on the daily chart invites the fresh leg of rally. So one can buy with support of 277, and this outperformer name can head towards 292 to 295 plus kind of level. So PSU banks or selective banks could do well. Apart from PSU, Federal Bank could be the one name which has outperformed and likely to outperform for more for further 5 to 10% kind of rally.
Okay, got it. Federal Bank is something that you're seeing 5% plus rally from here on. But it's on a related query, you mentioned that you're quite bullish on Canara Bank too. We have a query from Anil. He's asking the levels that we need to track from here on for Canara Bank.
Yeah, so like positive view on the SBI, as I mentioned, that is one of the strongest name. But yes, Canara Bank is also having positive to range bound bias. Buy on decline is clearly visible. In the last instance, it took support near 147. This time it took support near 149 half. So 150 can be higher base, and with this support, it can head towards 160, 162 kind of level. When you talk about Canara Bank, you cannot miss counter like Bank of India. Looks quite promising with support of 161. It can head towards 172 kind of level. So I believe we need to focus on the alpha generation with the strength. Most of the PSU could be on radar. So those who are watching this, definitely focus on the PSU banks with margin of safety and momentum in this market scenario.
Okay, all right. That's the view for the entire banking theme we have addressed. But yes, let's move on and take another viewer query. We have Anil, who's been asking the view on distillery stocks, for instance, Piccadilly Agro, Radico Khaitan and Globus Spirits, and whether these stocks are advisable to invest at the current levels. What's your take on all of these counters? And of course, as a theme, anything that you're watching out from this space, Chandan, because majority of them have been pretty sideways in the last couple of sessions.
Yeah, so like when you talk about such name, Piccadilly Agro, I think the momentum is missing. But yes, support-based buying is visible at lower levels. So one can keep the support near 590 with recovery hope of 625 to 630 kind of level.
Okay, all right, that's the view. But yes, let's move on and take another viewer query. We have Panu Anil, who's asking the view on CG Power and whether it's advisable to invest at the current levels. Any view on this particular counter, Chandan, for CG Power?
So CG Power has been making lower top, lower bottom on the weekly chart. It has seen a correction from 790 to 555. The structure is weak. However, it has gone into the deep oversold territory. I believe major support may be seen towards 515 kind of level. So structure is weak, but now it's oversold. Let it see some stability or follow-up activity, or let it find any kind of bullish reversal on the daily and the weekly chart. So 515 could be a major support in the counter. Don't want to go and jump now, but yes, let it correct further to form the bottom. That will be the right strategy for this counter.
Okay, all right. That's the view for CG Power. But let's move on, and we have another viewer query by Mrudan Gameshwar. He's asking the view on HPCL on how the counter looks like. Of course, in the last 1 month, we've seen that the stock has exhibited a negative trend, a 10% slide, and today also the stock is seeing a decline of about 0.7%. Chandan, how are you placed on HPCL, and how does the near-term trend look like?
So when you talk about oil marketing company, most of these counters are under pressure, making lower top, lower bottom. HPCL has seen a correction from 508 to 425, and as of now, it has given a breakdown. So till it remains below 437, I believe it can go down towards 400 kind of level. So weak structure, better to avoid or let them find some early sign of stability.
Okay, all right. Weak structure for the time being, and it will take some time for finding its stability. That's the cue. But yes, we have Sameer Naik who's been asking the view on HUL for a short-term investment perspective. HUL, what's your view? In the past 1 month, the stock has received relative buying interest, 4.5% gains, and in the past 5 days also, the stock has relatively done well in this weak market. What's your view, and what can we watch out from here on?
So HUL has been consolidating in a broader range from almost last 15 trading session. Multiple supports are seen near 2340, hurdles at 2440. So this 100-point range is working well for the counter. Till it doesn't give a decisive breakout, we have to play the broader range. But yes, overall trend is positive range bound, so buy on decline can be applied. So with support of 2340, one can see an upside move towards 2440 plus kind of levels.
Okay, all right. That's the view for HUL. A percent gains coming in from this FMCG major also. But yes, let's move on, and we have another viewer query that's coming in from Geetu Sandesh. She's been asking the view on Lemon Tree Hotels, given that she's currently running in a loss, and she's asking whether she should shift to another sector or hold on for a 2-year horizon. What's your view and what's your suggestion, Chandan, for Lemon Tree Hotels? Because in the past 1 month, we have seen a sharp fall on the counter.
Yeah, good morning, Gituji, and she is, I think, the regular guest for our show. So the trend of this counter is negative. However, we understand that hotel and travel and tourism is a big theme for India, but the counter is not performing. It has been making lower top, lower bottom from last almost 5 months. It has seen a correction from 180 to 127 levels. So major trend is positive, but immediate trend is negative, and because of that, counter has seen a corrective move. So if you have potential or if you have patience to hold for 2 years, then definitely you should go. But if you're looking for short term, it would be tough to get the recovery. As of now, if you can do the averaging, try to accumulate near 120 with the view that it can head towards 150 to 170 kind of level on positional point of view.
Okay, all right. That's the view for Lemon Tree Hotels. Let's move on, and we have Preeti Singh who's been asking the view on NMDC on how this particular counter looks like from a near-term perspective. Chandan, what's your view for NMDC?
Yeah, so looking at NMDC, it has seen a correction in last 3 weeks, but now taking support at the lower band of the previous hurdle zone. So role reversal kind of setup. So I believe with support of 77, look for a recovery towards 84. I want to share one more name here. That is Bombay Stock Exchange that is coming on my radar. I'm closely tracking this counter, and what I noticed in last 30 days, 5 times it took support near 2570. And this earlier 2570 used to act as a hurdle, and now it is acting as a support zone. And negating is lower top, lower bottom of the last 4 days. So those who are looking for slightly weekly point of view can accumulate BSE with support of 2570 for a recovery towards 2900 and 3200 kind of level.
Okay, all right. That's the view for this particular counter, and of course, BSE can be the next stock to focus on. But yes, let's move on and take a viewer query. Hari Krishnan has been asking the view on Karur Vysya Bank at about 254 buying price, and he's asking, well, how does the near-term trajectory look like? Of course, the stock has been consolidating in a higher range of about 250 to 260 odd levels. Chandan, can we expect the upside to hold going ahead?
So it has been consolidating, but the good part is holding well above its 50-day exponential moving average. So those who are accumulating, keep the support near 250, use the buy on decline stance. And I believe with support of 250, this counter can head towards 280 plus.
Okay, all right. That's the view for Karur Vysya Bank. But yes, let's take another viewer query. We have Shikha Kapoor who's been asking the view on Hindustan Zinc. and how this particular counter looks like. Chandan, what's your view? Of course, the stock has been making record highs every day, and yesterday also it did make a record high. Today it's seeing a bit of a cool off. But from a near-term perspective, can we expect more consolidation on the way?
Thank you, Sikhaji, and I think these are the frequent Insta follower. And Sikhaji keep on asking so many questions. So thank you so much for being here in Money Control Show. So Sikhaji, my suggestion is that it's time to book some profit in selective metal counter. I'm recommending Hindustan Zinc from last 3 months. Counter really rallied well from 450 to 700. Major trend is positive, but as precious metal might see some consolidation, most of these counters have gone into the deep overbought territory. You might see some consolidation. So my suggestion is either to book some profit or keep the trailing support low, trailing support for the counter. So looking at the positional point of view, 650 is major support for Hindustan Zinc. Till it holds 650, trend could be positive to range bound, but upside seems to be limited and kept now. So it would be better to book some profit so that you can accumulate or buy again if counter declines, because already these names have really done well, rallied well in last 2 months from 450 to 700. So you can understand the gains of more than 30-40% is decent enough in last 2 months. So this is what you need to keep in mind. There's no worry about the trend and the setup, but better to look for the risk reward ratio point of in trading and in capital markets.
Okay, all right. That's the view for Hindustan Zinc also. Let's take another viewer query. We have Alex who's been asking the view on PNB Housing and whether it's an opportunity to buy the current levels. Of course, the stock is seeing a slide of about 5%, given that given that the Q3 results has missed the street estimates. Chandan, what's your view for PNB Housing? What would you suggest to do at the current sharp fall for the counter?
So that immediate trend is negative. It has been making lower top, lower bottom from last 12 days. It had corrected from 1015 to 870. I believe some more corrective action can be seen in the counter, which can take it towards 835, 850.
All right, that's the view for PNB Housing. All right, just one last question before we let you go, Chandan. Anything that you're finding attractive, given that we are seeing a bit of recovery in the markets after 3 days of consecutive sell-off? What are you finding attractive at the current levels?
Yeah, so already I recommended, and I reiterate and repeat the name. Positive on the bank Nifty, the way it respected 58,700, I believe that could be a major support for the banking index to drive the rally towards 60,000 and beyond. Positive on the two counter, SBI and Federal Bank. SBI looks good. It has been making high top, high bottom on the weekly chart, has seen a consolidation of last 4 days, and now again the fresh leg of rally is visible with support of 1025. It can head towards 1080, 1090 kind of level. Federal Bank looks good with support of now 280. It can head towards 292, 295. So I think these are the name, and BSE already I recommended with positional support at 2570 for an upside target towards 2900 to 3000 marks.
All right, that's the view, and those are the picks that we need to watch out for. But with that note, we have to let you go, Chandan. But thank you so much for your time and joining us.
Thank you.
All right, definitely looks like the markets are quite happy today. If you look at Sensex, it's soaring with about 800 points gain. Nifty is also above that 25,400 mark. So yes, 250 points coming in for the benchmark index. Also a percent gains for the Nifty 50 index. If you look at the broader end of the markets, they are also supportive of the gains. 1.5% gains coming in from the Nifty mid cap and small cap index, while India Wix has relatively cooled off with about 3% decline. So yes, showcasing that the markets have been pricing in the easing geopolitical tensions and of course the positive remarks on the US-India trade deal front. But yes, so majority of the sectors have been trading with about good set of gains. If you look at the Nifty PSU Bank, that has been soaring in the trade, one of the top sectoral performers of the day for now, 2.5% gains coming in from the PSU banking pack. But other than that, Nifty Metal Index has also been showing good traction, 1.5% gains coming in from there. Nifty IT Index also sturdy in the trade. Nifty Realty also showcasing good set of gains with about nearly 1% as of now. But yes, let's talk more about markets and the way ahead and move on to our next guest of the show. We have Amit Kumar Gupta, who is the founder and CIO of Fintrekk Capital, joining us. Amit, of course, good morning, and good news from the Trump, not just on tariffs on EU, but for us too, once again reaffirming the India-US trade deal on track. But this week has always been about headlines moving markets. How much do you think is sustainable going ahead?
Yeah, hi, good morning. Thank you for having me. I think after Trump's speech yesterday in Davos, the market sniffed out quite early that there will be no military action in Greenland, and his stated case actually made little sense as US is already allowed to build and operate military facilities for defense on Greenland. So I think it has sensed out that there will be no military action, and obviously Greenland holds some major strategic value for the US because of its rare earth mineral reserves and Arctic military positioning. So Trump is using these tariffs. It sort of fits into a broader pattern of using economic pressure to pursue geopolitical goals, which can be seen in US sanctions, which can be seen in diplomatic pressure on Iran, and even the recent military action in Venezuela. So these are all strategic leverage happening in the geopolitical world. Obviously, that creates a lot of headlines, and that moves markets on both sides. But the overall scenario currently is that there will be no military action in Greenland, and we'll have some sort of understanding between US and the Europe. Especially, there will be a broader endorsement of the NATO. So I think market will find a footing. Obviously, if the headlines come, then markets would react, but eventually they'll find a footing.
Okay, got it. But Amit, we have seen that safe haven assets continue to rally. I mean, gold, silver prices, they have already, seen a record-breaking rally this year also. Now, given that, if indeed the geopolitical tensions ease, do you see a correction from there?
Yes, I do see a correction in both gold and silver. A lot of the tensions led to panic buying happening in both these precious metals. Technically, I think both the commodities are actually quite overstretched. If you look at daily charts, the RSI is constantly hitting 85-90. Weekly and monthly charts are also quite overstretched with this parabolic move over the last 3 years. So if there is some understanding and there is no further threats, we should see some correction happening in both the counters.
Okay. What about copper? I mean, base metals like copper also could see. I mean, they are rallying on the back of some structural demand from electrification and renewable energy. Do you agree that this would be a long duration theme, or is this just a given that the entire metal pack, precious metals pack has been rallying, so this is also rallying on the back of that?
So copper is a little bit of isolated case in the longer term, or even in the medium term, because there is a supply demand issue happening with what is happening with the Latin American sites, certain Latin American sites like in Chile. So there could be some sort of a shortage, which could lead to much more stockpiling happening, and physical buying also getting a little postponed. So what we are going to see is probably intermediate corrections, but over a medium to long term, I think the trend there is bullish.
Okay, got it. Amit, what's your early reading of the Q3 results that has panned out so far? I mean, IT, banks, and today we are seeing Eternal and Dr. Reddy's reporting good set of numbers. So anything that you're watching out?
Yeah, so far the IT pack has been sort of at par with the expectations. The low expectations in any case were low. There was some impact because of the labor law accords which came on 31st December. So every company has made some sort of leverage for that. But the hope is that the commentary which has come, especially from the IT services major, is that this year we'll see less of an impact of an AI, because changes have been made in the business model and they can cater to much larger demand. So I think going forward, IT services can do well. It technically probably needs a little bit more time to sort of break out. But given how the commentary is coming, and if we don't get too much of AI pressures from the US, then we should see it sort of outperforming in this calendar year. So that is one of our top bets, as far as the large caps are concerned.
Okay. But, does the management commentary so far signal that we could have a better FY27 growth from here on?
Yeah, better than FY26. That's a commentary which is coming along, because a lot of these AI projects were actually on hold, or the decisions were not getting made. But now we are seeing actually the decisions being made, because everybody wants to commercialize AI. There could be, and plus the companies have also adapted. The companies have also made changes into the business models. There are many more employees which are getting trained on this. There can be a possibility of better utilization of the current resources. And if the business comes back with a 5 to 8% growth also, then we should see some of these stocks do well.
Okay, got it. Amit, you mentioned that you're positive on the large cap space, but we have seen a deeper sell-off in the broader end of the markets. Would you say that this is the right time for investors to actually spot multi-baggers going on from here on?
Yes, I think one cannot say that the final capitulation has completed in the broader markets. I think there's still some way to go, but there have been opportunities where the valuations have really become mouth-watering. So one needs to really pick on themes and stocks. I would say the broader markets are much more stock specific right now than that at an index level. The index may take some time to happen. But there are clear signs in certain pockets where if you do the stock picking and have a longer term horizon of at least 2 to 3 years, then there are a lot of stocks which can compound well, which can do well and become multi-baggers over a period of time.
Okay, got it. Amit, what about from a valuation perspective, given that how we are panning out from the Q3 results, does the levels hold from an index level? Because earlier we were saying that India's narrowing valuation premium versus the emerging markets is going to hold appeal going ahead for the FIIs to make a comeback. But are the Q3 results making enough conviction for the FIIs to make a comeback?
So the emerging market premium has come down. If you look at it last year, 31st December 2024, then the premium was actually 45%. That has come down to about 16-17%, and the long-term averages is about 15%. So that premium of India over the other emerging market, that has come down. Obviously, India has underperformed, and other markets like Taiwan and China have outperformed in the last calendar year. So that premium has come down. So that is one thing. Second is the forward valuations are not very expensive, given that some of the newer age companies have also come into the index now. It's still trading at 20-21x, which is not extremely expensive. I think for FIs to come back, we would probably need a little bit more push towards what is happening with the tariff deals, because it's a kind of a hanging sword on the markets as of now. Once there is much more clarity that this is not going to get worsened and we'll have some sort of a deal in the near future, I think that would push FIs to start buying again. Downside, I think another 5% probably is the worst case scenario. But at the same time, earnings growth will not be, at least for this calendar year, the earnings growth will not be that we will have a sort of straight bull market. I think last year it was about 10% return on the calendar year for Nifty. This year we can see a little bit better, 12-13% return on the Nifty. But once we are investing for 2-3 years ahead. So 27 and 28 should be even better than 26. But 26 will be better than 25. That's how I am postulating it.
Okay. Amit, take us through some of the themes that you're underweight and overweight on after the, given that the Q3 results have been rolling out as of now. I mean, we discussed about IT banks, but anything other than that you want to highlight here?
So we have been underweight for quite some time on capex related themes. Some of the capital goods companies, especially in the space of railways and defense, we have been quite underweight. or actually have zero allocation to a theme like defense. The reason for that is a lot of the valuations were pricing in for 5, 6 years ahead, and there were no room for execution errors. So I think with the last sort of 1.5 years of correction, there has been a time correction, there has been a price correction, but I still feel, once till the point government commits to a major capex, which we'll probably see, how the commentary goes in the budget. I think there is still some risk. There are some execution risks. So we are not very keen to initiate positions into that. We'll probably take it a little slow and evaluate on a quarter-to-quarter basis. As far as the overweight themes is concerned, we have gradually, increased our allocations in discretionary consumption space over the last 3, 4 months. So whether it is hospitality, whether it is QSR, whether it is alcohol beverage space, we've increased our allocations or initiated new positions into these spaces. We believe that with all the tax cuts, GST rationalization, pay commission coming next year, and interest rates trajectory on a lower side, we will see consumption coming back. So probably 25 was year 0, 26 is year 1, and 27, 28 will be year 2 and 3, where we'll see some solid growth coming ahead in this space. So we are overweight on the consumption space.
Okay. What about FMCG? I mean, already this year, starting of this year, we have seen that FIIs have already exited this particular sector with about 6,000 crore rupees of worth of outflows. How are you placed here?
So FMCG staples portion, we don't have really a position. We think the valuations are still expensive, and there is a lot of competition from the unlisted, which is private equity / VC space funded. So a lot of these products are actually facing a competition, especially in tier 2, 3, 4 cities. So we don't really have a position in the staples. We are more towards the premium side, more towards the discretionary consumption rather than staples.
Okay, got it. What about the metal space? I mean, of course, last quarter it was one of the major drivers for the India Inc.'s earnings season. How are you placed going ahead? Do you think that majority of the stocks have already been in overstretched territory?
Yeah, at this point of time, I think some of these are on overstretched territories, but that comes with the theme. The metals are a lot geopolitically driven; they're headline driven, so you see a lot of volatility. From a 1 to 2 years perspective, I think I'm still positive on the metal space, especially on the non-ferrous side. But we'll keep on seeing these intermediate corrections, but till dollar index does not really break out above 103, 104, and with the volume growth coming back into some of these names, especially non-ferrous names and steel as well, my sense is that they should do well over a period of time.
Okay, got it. Amit, just one last question before I let you go. I mean, what's your stance on the rupee? Because we have seen that record lows it has been reaching against the US dollar. And despite the US dollar depreciating, we're not able to monetize that, despite the RBI's intervention that's coming ahead. Do you see a sharper fall going ahead?
I think probably 89 to 92 is the range which we are working on. There could be like some overshoot to 93, 94, but RBI stance has been to let go of the rupee. So for a very, very long time we had the rupee in a very narrow band of 85 to 88%, 88 rupees. Now that range has changed, 88 to 91, or probably 89 to 92, whatever way you want to look at. RBI has categorically said that they want to control the volatility. They don't really want to control the levels of the rupees. So if there is undue depreciation in the rupee, they'll come back and sell some dollars to sort of control it. But given how the tariff situation is playing out, how the exports are impacted, it is making much more sense to let the rupee depreciate. The traditional 10-year sort of depreciation level is about 3.5%. I think that 3.5% was done last year. It probably overshoot, so it will correct a little bit. But broadly, we are working with lists like 89 to 92 kind of a range, until unless the bond yields really shoot up. Obviously, we have a budget coming up. We have a RBI policy coming up in February. So that will give us a little bit more account on how the liquidity and your fiscal situation is turning up. But broadly, we are working with this kind of a range, 89 to 92.
All right, 89 to 92 is something that you're working with. All right, on that note, we have to let you go, Amit, but thank you so much for your time and joining us.
Thank you for having me.
Right, let's take a quick check of the markets. Of course, the Nifty 50 has been quite resilient through the day. 25,400 levels, that's what we are working with as of now. And Sensex has also shot up by about 800 points, a percent gains coming in from there also. But yes, the rally has been quite broad-based. Broader end of the markets have been showing similar kind of gains. But yes, they have been outperforming the benchmark index with about 2% gains. India VIX has relatively cooled off from yesterday. And if you look at majority of the sectoral pockets have been trading in the green. If you look at autos, PSU banks, both these indices have been showcasing good set of gains with about 2%. But yes, remember it's also the Sensex weekly expiry day, so any kind of volatility can be crept into the second half of the trading session. But for now, we're happy that we have a good markets to start off with. And of course, given that the global markets and of course the easing geopolitical tensions, the bulls have remained in focus and in favor of the markets as of now. But yes, with that, we've come to an end of this edition of Opening Bell. Do not forget to tune in at 3 o'clock for closing, and we'll understand how the market is developed with our experts, which will be lined up in the show, and also discuss some of the individual movers of the day. Until then, signing off, do stay tuned to moneycontrol.com.